Hello and welcome to my channel today. My name is Henry. I am so happy to be here with you today after a very long while. First and foremost, I am sorry for keeping you waiting. And secondly, I want to say thank you for being patient and for tuning in once again after you realize that I've uploaded this new content. Thank you so much. I am deeply grateful. If you're a new visitor, please remember to subscribe to the channel, leave a like, comment, make a request, a suggestion, something that I can work on, and within the shortest possible time, you're gonna have it here. And if you're a regular visitor, regular subscriber, regular viewer, I want to say thank you very much. You're the reason why I do what I keep doing. Today, I want to talk about Fibonacci trading principle. Yeah, a whole lot of people have actually asked to understand what Fibonacci is all about, how we can trade it in the synthetic indices market. And if you're one of such, this video is actually for you. However, if this is actually the first video you're actually getting to watch on this channel, please do go through the other videos, watch them, like, comment, drop suggestions. I'm definitely going to give you a feedback. Okay, under the Fibonacci trading principle, I'll be addressing subtopics such as the Fibonacci, how to trade the financial market using the Fibonacci tool, and the Fibonacci trading strategies. So for us to do that, I will be using our trading view implementation, focusing on Boom 1000 market and step index market. All right. Oh, I've already done this analysis, so I think I should clear this up. All right. And then also fall to our MT5 to do one or two references to. Okay, so let's go straight to our main ordeal of the day. What is Fibonacci? Now, Fibonacci is actually a price action tool that has been employed in different fields of study, architecture, mathematics, and even in finance. It's been employed. Now, it comprises a set of progressive numbers. The numbers keep increasing in terms of progression, and this was due to the discovery of an Italian mathematician with the name Leonardo Fibonacci in the 12th century, whose aim was also to forecast possible future occurrences or events that might take place on even probabilities. Now, when this was applied in finance, it was incumbent that the progressive numbers could be divided into two. One was called the retracement numbers. The second was called the extension numbers. Okay, this is what I mean. In MT5, this is where we have the Fibonacci tool. Okay, all right. So if I take this guy and drag, oh, sorry for that. If I take the Fibonacci tool and drag, you can see that we have set of numbers such as 0.023.638.2, and the number continues to progress to 100 down to 161.8 to 61, and it continues so and so. It keeps progressing. However, the difference is that with the trading view implementation, you can do actually much more than what you can do with the MT5. Reason being that the trading view gives you opportunity to add more Fibonacci numbers to what you already have. You can see numbers such as 78.6, 100, 127, 141. That's because you can actually do more with the settings on trading the implementation. And if you're wondering how to get that, just come to the third icon here. There's the first icon, second icon, the third icon here. Click on it, and then you'll be amazed. This is where you'll find the fee retracement tool. All right. Having known what Fibonacci is, it comprises a set of progressive numbers which are divided into what? Retracement and extension. So what are the retracement numbers and what are the extension numbers? The retracement numbers are 0 to 100, 0 to 100, like we have here. whereas above the 100 is the what? Extension. So we use the 0 to 100 for what? Retracement or pullbacks, and then we use this to measure what? Forecast future price purposes. Okay, so having known what Fibonacci is, how can we now use Fibonacci in financial trading? It's easy. The first step is for you to have a good understanding of swing highs and lows of a trending market. Swing highs and lows of any trending market. And for you to understand the swing highs and lows, focus on two things. Number one, a higher time frame. Number two, the beginning and the end of a trend wave on those higher time frame. What do I mean by that? This is step index, and looking at it, step index has actually been on a bearish trend for many years, over 3 years or 2 years plus. Okay, so to identify our swing highs and swing lows, the clue was to look at number one, a higher time frame. So we're on a 24-hour time frame that you can see here. And the second one was on what? To focus on the beginning and the end of a trend wave, which is what? This. I'll look at this, and then this, and then this. Okay, so those are actually the beginning of a trend wave. So for this wave here, this is where the trend started, and this is where it ended. Okay, now you can see that between here and here, we had a pullback. Now, this concept of measuring pullback comes with the ideology that a trend wave comprises what? 100%. All right, so from here to here, the whole of this is counted as 100. Like, what I mean is the whole of this to this is counted as what? 100. So this pullback is actually pulling back into the percentage within the 0 to 100. Okay, so actually when we talk about pullback, we are actually saying how many percent or to what extent has there been a correction in this trend. So that's what the Fibonacci helps us to understand. And after the trend has actually corrected, how then can we forecast future prices using that pullback? That's a simple meaning. So let's use our Fibonacci tool to get that done right now. So considering this, we can drag, okay, to no. So if you look at it very well, you will observe that what the pullback moved up to what? 61.8. And this 61.8 is what so many traders tend to call the golden ratio. The golden ratio. Okay. So having known that, this is how we measure a pullback. Okay. So how can we now measure a Fibonacci extension? Now, the reverse is the case. In Fibonacci extension, we focus on how we can use this pullback to focus future prices. Okay. So for us to do that, we'll just do a flip of the Fibonacci. A flip of the Fibonacci. So we're gonna flip this up this way. Okay, then place it here. So we can see that future extension prices 127141. You can see where this could have gotten to, all right, of which the price has actually gotten there. All right, now considering boom 1000, which is actually on an uptrend, I'd like us to do something real and possibly do a live forecast. And please let me state here emphatically that this video is meant for educational purpose and it is not a financial advice. If a trader decides to take trades based on the tutorial content of this video, let he or she know that such is at his own risk, because trading the financial market comes with a certain level of risk, which might involve losing part, a portion, or if not, complete portfolio of yours. So please, if you're trading, do so carefully and do so at your own risk. This video is for an educational purpose. All right. So in this case, we've actually observed that this has been the beginning of the trend and the end. And then this gave rise to this and to this, and then to this and to this, and then actually to this. This is what we cannot call this a confirmed zone, because we don't actually know if it's going to take out this zone here or if it's not going to take out this zone here. All right. Now, but what we are actually going to do is that, since we cannot call this a pullback, we can now use it to forecast future price movement if our range of price is actually going to go on an uptrend. How do we do that? First and foremost, let's look at how we can use the fib to know how many percentage has this pullback actually gotten into. All right. So this is how we got it. So out of the 100%, we've discovered that the pullback here only led to 50%. Now, 50% of the trend. I have to say here, sometimes when you measure your retracement, you can observe that the candles may not directly fall on the Fibonacci levels. It might fall in between two Fibonacci levels. Such may be the case, and when that happens, it is a regular stuff. There is no 100% perfection in this market. Understand the concept and maximize it appropriately. Okay. Now, if paraventure, this pullback here is going to give us what we are forecasting, let's just assume the market is going to go upward. So can we focus a future price from here? Yes, we can do that. And how do we do that? We will flip this down and then take it up. Okay. Keep it there and then here. So we expect that when price begins to buy up, if paraventure, that's going to be the trend. This can be our future take profit level. That's TP1, TP2, TP3, and the market continues like that. All right. Okay. So please, if you have any question, any suggestion, kindly make do with the comment section. Drop your like, drop your comment, drop your suggestion. And if you want me to make a video for you concerning any topic of interest, please feel free. However, do not forget to subscribe to the channel. Do not forget to like the video. Go through other videos and then make the best of it. Okay. Now, having known how to use the Fibonacci on the swing highs and the swing lows of any market, the next thing that I want to talk emphatically on is on how you place the Fibonacci. You know, the Fibonacci has a peculiar pattern that we can, most traders tend to have issues with, and that is how to place the Fibonacci. So please, I want you to watch it appropriately. Now, when you are looking at retracement, you have identified your swing high and your swing low. And then you want to measure a retracement, for example, this. All right, you want to measure this retracement. After you have identified your swing high and your swing low, it is very easy for you to know that in retracement, we always place the 100 point of the Fibonacci at the beginning of a trend. To measure a retracement or a pullback, we place the 100 points at the beginning of a trend, and we place the 0 point at the end of a trend. This in Boom 1000 is a peculiar situation of what? An uptrend. And in a downtrend, let's consider step index. Okay, so if we are going to consider this trend here that had a pullback and drop, okay, so let's look at between here and here to measure this pullback here that took place. So we are going to place the 100 at the beginning. Do not forget that the 100 at the beginning of the trend, which is here, and the 0 at where? The end of the trend, which is what? Here. Okay. That is how to place the Fibonacci when you are measuring what? A retracement or a pullback. So this pullback was actually between 23.6 and 38.2%. There's that same thing I talked about, that most times price will tend to fall in between two Fibonacci levels. However, when you are looking at the Fibonacci extension, the reverse is the case. The 100 point will now be at the end of the retracement, the pullback, while the 0 point will now be at the beginning. This is what I mean. Let me flip this aside so that we understand. Now, we all know that this is the beginning of the pullback, and this was the end of the pullback. So our 0 point will now be here. So this is the beginning of the pullback, and this was the end of the pullback. So we're going to bring our Fibonacci tool to measure it accordingly. Okay, so here we go. All right, so I think I have to delete this. All right, so let me zoom in so that we can actually get to see the extension point. Okay, so the beginning of the pullback had the 100 points and the 0 point at the end. So if we check the 127, let me extend this so that we can see. Okay, thank you. The 127, the 141, the price actually extended to get to these points. So we could have used this as TP1 after the trend has resumed. After the trend has resumed. So without a resumption in the main trend, we cannot use Fibonacci extension. Okay, conversely, in Boom 1000, we talked about it that in this case, we are going to do what? We are going to flip it. So why are we flipping it? The 0 point will now come to where the pullback actually ended, and the 100 point to where the pullback actually started. So here we can see future prices, that if price is actually going to go up, like going to buy up, most likely the price will get to 127, 141, 161. So that is how to use the Fibonacci and how to place the Fibonacci in retracement and extension purposes. All right. I'd like you guys to actually go through these notes. If you need an e-copy of it, you can request for it, or you could visit motivationafrica.com to read about Fibonacci. I will drop the link in the description section, so please make do with that. Okay, and then the last but not the least part, what are the Fibonacci trading strategies? Actually, there are two types. We have the single trading strategy, where you use a Fibonacci, a single Fibonacci, or a Fibonacci confluence. And then the second strategy is when you use specific candlestick patterns. Okay, so let me go straight to the chart. Let me make do with 1000. Okay, so in Fibonacci, single Fibonacci trading strategy, where you use one Fibonacci, That involves you just using just one Fibonacci to either determine the retracement or the extension. Just one single Fibonacci like this. But in double Fibonacci confluence, you can decide to use two Fibonaccis within a trend, like in this case. You just identify the swing highs and then you look for where possible areas where you will have confluences. Confluences are zones where Fibonacci levels tend to be very close together. All right. Now, usually what happens is that when people use Fibonacci confluences, they tend to focus more on long-term trends, which for now, I wouldn't suggest that in synthetic indices because synthetic indices is less than 5 years old, except you are going to focus on scalping time frame. But for now, I would suggest and recommend the one Fibonacci tool that we are using. Okay, the second strategy covers a combination of the Fibonacci with specific candlestick patterns, trend lines, or etc. Okay, or use of indicators like RSI where you have divergence purposes. Okay, now let's look at a specific example with our chart 1000. Okay, so here we had a situation when we measured this Fibonacci level. Okay, let's look at this. Right. When we measure this Fibonacci level, you realize that at this point here, at this level here, the price came down between 61.8 and 78.6. Okay, this could have been a good point to note. Reason being that at that level, what we had was we had a reversal candlestick pattern. I think I need to bring back the Fibonacci so as to make it clearer. All right, you can see this. We had a reversal candlestick pattern here, and even at this point. Okay, now this, since it's a 24-hour time frame, gave a signal which actually, if we were to combine it with maybe an RSI at this level, what we will have will be a divergence. In other words, price is making lower low, but the RSI is beginning to make higher highs. All right. Now, if you do not understand divergence and convergence, I'll ask that you check back on the channel in a week or two, because I will make a video on that, understanding divergence and convergence using MACD and using RSI. Okay, and if you have issues with price action, especially with identifying the swing highs, swing lows, I'll drop a description, a link to my price action video that I have made. It has over 24,000 views. You can make reference to that. Or also, you could exercise a little patience and check back within a week or two, where I'll be making a more comprehensive video on price action, which involves the use of trend lines, all right, and other price action parameters such as candlestick patterns, etc., etc., etc. So at this point here, we had a reversal candlestick pattern, which we all know as the morning star. All right, if you check it out, you will see. Look at it here. So beautiful and so peculiar. The three candlestick. Yeah, the bearish candle got a kind of indecision before the bulls came in and pushed the price upwards. Okay, and with such signal with the Fibonacci level, it clearly signals that something is about to happen. Even on another level where we moved and progressed. Just a second, please. I moved to this point. Yeah, the retracement actually came back down to this level. So let's go straight to the third level where we had another Fibonacci point where we had confluences with candlestick patterns and the rest. Okay, so let's look at between the 50 and the 68. Okay, here we had the tweezer top. Here we had rejection candlestick patterns where we have a lot of hammers at this point. Okay, so this in itself was something you could match with the Fibonacci and then trade it together. Okay. Now, for some people that are actually wondering, what about Fibonacci and trend lines? Okay, we could also trade Fibonacci with trend lines. We could have actually traded that. Right, that's point one. And that's, let's look at point two. Okay, that's point one. That is enough. So actually, with this in mind, let me get my feed to with this in mind, we can observe that something most likely will happen at this point. So it is now left for us to be on the lookout at this 50th point where we have the Fibonacci level in relation with trend lines. And of course, there will be rejection candlestick or reversal candlestick patterns. Now, with that, I would like to call this tutorial to an end. I'll give a recap of what we've done so far. Now, Fibonacci in itself is a price action tool that will help you to trade pullbacks and extension levels if only you will know how to identify your swing highs and your swing lows and then place the Fib tool in a peculiar pattern. When you do this, please also remember that you can use a single Fibonacci tool or you can use it in confluence with other price action tools such as specific candles patterns, indicators, and trend lines. As you continue to trade successfully and make money, I see you going on your way forward. Meanwhile, before we go, please do not forget to comment, do not forget to like, do not forget to make suggestions, do not forget to reach out to me on Telegram. The Telegram group is fast growing and I want to say thank you. You can reach out to me through there also. And if you need mentorship guidance, please do not forget to link me up. Once again, thank you for watching the video and have a great time.